Today we have 5 big news stories to share about Tesla. First, Tesla sales in China just had its best week of 2024 so far. With 1 week left in the quarter, Tesla's China numbers are already 14% higher compared to last quarter. Second, at the shareholder meeting, Elon Musk was asked by the audience to relaunch the ability to transfer FSD to new vehicle purchases. Well, Elon has come through, and starting today and ending August 31st, you can do just that. Third, the CEO Xiaopeng is now saying after testing Tesla's full self-driving and Waymo here in the US, he's more bullish and predicting fully autonomous driving will have his ChatGPT moment next year. Fourth, Tesla's continuing its hiring of employees for its Tesla Bot as it ramps up to 1,000 to 2,000 bots next year. But this role for a project manager is really only hired if you truly are ready for launch. And finally, we'll look at Elon's response to Ron Barron's prediction and when Tesla stock will rise again. I've got Hans Nelson joining us. Hans has an amazing YouTube channel called Hans C. Nelson. He's growing it. It's building quickly. Thank you so much, Hans.
Hey, thanks for having me, Herbert.
We have lots of stories. Let's get through each one of them. And you have quite a bit of knowledge for several of these, and that's why it was perfect for you to be responding to this. So let's go start with the big news, I guess. Sometimes we really shouldn't be looking at these weekly numbers, but when we show you the graphs as how it grows over time, that's where it's important. So the Tesla China insured numbers for this last week, it looks like in 17 to 23 June, you have 17,500. This is, at least a good growth from the previous weeks before that. In fact, it's the highest we've seen weekly numbers for the year. Tesla Chan does Tesla Chan does a great job tracking everything here. You can see this. This is 2024, January, February, March, April, May, June. He's been tracking the numbers. And you can see here that it's a slow start, right? There's a seasonal to automotive sales. January is usually very low, and then finally be popping up. So if you look at that in graphs, which we'll do shortly, you'll see that Gary Black kind of summarizes it well. This was the best week of 2024 so far, included 6,000 Model 3s, the highest since the Model 3 Highland launched last November. 1 week left in the quarter. So what we're seeing here is that it's 14% quarter over quarter compared to last quarter, but it's still 7.2% below what the Tesla China did last year on the second quarter last year. So here's the graph. The 2024 Q2 is in pink. So if you look at 2024, as the weeks of the quarter, that's a pink. And here we are at the highest of the quarter, for the quarter at least. And then in 24 Q1 is blue. This is the Q1 much lower. And then if you look at last year's 23 Q2, that's green. Then it's still higher than the pink, or it's just barely getting there. Yeah, that would be higher. Okay, what'd you think about all this?
Yeah, it's good to see these numbers really starting to trend upwards. And, the other thing, the 17,500 number, not only was that the highest this year, that was within spitting distance of some of the highest quarters or the highest weeks last year. So I think the highest weeks in 2023 were in the mid 18,000 range. And so, only a few percentage points away from highest weeks production ever in the history of the Tesla China plant. And like they said, this is the highest since they rolled out that Highland update. And so that is, something that they do have to continue to work through, ramping up that newer product to where they can get it to the same high levels that they had the previous version of the Model 3 to. And so all of that is good news. And to see those here early in the year is good, where hopefully by the end of this year, we can be reaching those 18 and then maybe even surpassing into the 19,000 a week, 20,000 a week numbers. And so I think that all of this is good context for people to realize that things are going relatively well in China, that we're continuing to have high levels of production. We haven't really built out any new factory space. And so, we shouldn't be expecting China to grow significantly beyond the amount of production that they've had in the past, just because that was such a well-utilized factory. But I think this signals good strength of the business there in China at this point in time.
Good. So China is doing fairly okay. At least it was getting scary to see what's going to happen to China's economy. Looks like early signs, but it looks like it's doing okay so far. So another bit of news here is that FSD transfers. So when Elon was at the annual shareholder meeting, Elon was asked the question, please let us do transfers. He paused for a long time. He said maybe one more quarter, and he agreed to the 1 quarter. So starting today, and it will end in August 31st. So you have about 2 months here. If you buy a new vehicle, Model 3, Model Y, Model S, or X, then you'll have the ability to transfer if you've got ownership of full self-driving from one of your previous cars, if you want to. It's still stackable with all existing incentives. You can trade it in for the existing VIN with the FSD is not, or trade in is not required. So this is the obviously a beautiful photo. You can see here it's already started. Transfer full self-driving capability to your new Tesla. So they've already done this before, and he just allowed you to do one more. What's your thoughts about that? Like, why is Elon so resistant to letting anybody just transfer FSD at any time? So if you buy it for one car, why can't you decide to switch it to another car?
I think he is definitely under the thought process that FSD is something that becomes more and more valuable over time. And obviously, he's been bullish on the timelines, and it's taken longer to get to that point than he expected. But all of that said, I think that he wants to make sure that the value that Tesla's receiving for selling these vehicles and these products to customers is reasonable for the amount of value that's being provided to them. And if we get to the point where we do have the essentially driverless robotaxi levels of functionality, then that $15,000 price point is too low for what that vehicle can then do. And so he's trying to avoid the situation where they sell products for $15,000 to consumers, or 8,000, or 12,000, whatever the case may be. It's kind of shifted around over time, and then have that piece of software be worth 30, 40, 50, 60, 70, $100,000. And they've kind of missed out on that ability to monetize that at a level that really is, um, I think, in keeping with the amount of value that's being provided. So I think that's where he's at. Obviously, customers are on the other end of that. They want to, if you've spent, it feels like a lot of money. Whether it's $8,000, $12,000, or $15,000, that's a lot. It's a lot, especially in comparison to the value of the vehicle itself at this point in time. And so, if you like lay that amount of cash out, of course, you would like to maximize the amount of value that you get in return for that over time. But since we haven't gotten to that point where it really is able to drive, like, Elon's the value of FSD in Elon's mind is based on what FSD is going to become, and for customers, the value of FSD is what it can do right now. And there is a gap there, like, and I 100% understand that tension between customers and Elon's perception of that value right now, because it is the gap that is real. That FSD, while it is a very impressive piece of software that holds a lot of exciting potential, that it's not a perfect piece of consumer software at this point in time. And so people are like, hey, I paid a lot of money for this and I haven't really gotten as much value out of it yet today as I paid for it. And so I think I should be able to transfer it to the next vehicle so that I can continue to get more value back out of it. And I think that's why Elon is, you
Mhm.
know, willing to make this concession and go ahead and allow these FSD transfers, is because it is a fair concern.
Yeah, it is a good thing. Okay, good answer. So here's the big news. We're continuing here not only, the progress ourselves when we see FSD, how well is it moving? We're seeing now other CEOs have been testing Tesla's FSD and they're making comments. And so the latest is Xiaopeng CEO. He was in the US in the last several months. He's been testing not only Tesla's FSD, but Waymo. He was testing Tesla's 12.3.6, not 12.4, and he was asking for that. So then he tested it, and then he posted on Weibo his feedback and thoughts. And basically, it's all very, very positive, right? So he shared his observations and he said that Tesla's FSD is very bullish now on autonomous driving, even going out to say that he sees fully autonomous driving could be a chat GPT moment next year. So he says this: in the past couple of days, I had the chance to experience FSD version 12.3.6 in California. I also took a ride in Waymo. Overall, Waymo performed better in downtown San Francisco, while FSD excelled in Silicon Valley and on the highways, achieving very high scores and handling various road conditions smoothly. Very nicely, politically said here. I am truly impressed by the significant progress FSD has made in just a few months. We plan to learn from FSD's excellent features and user experience. I believe 2025 will be the ChatGPT moment for fully autonomous driving. Here's his post on Weibo. Weibo. I was thinking Waymo. It's Weibo. So, throughout the experience, FSD's performance is still very smooth. It makes me feel at ease in most road conditions, which is very similar to that of a human driver. Now, he says this, right? China's roads are more complex than those in the US, with more people and cars. I'm looking forward to FSD's performance in China. At present, our Xiaopeng's XNGP has fully adapted to China's road conditions. We invite Elon to China to experience XNGP. We also look forward to more exchanges in the entire industry to jointly promote the popularization of smart driving around the world. I swear, Hans, this sounds like he's setting himself up for a partnership with Tesla. I mean, I don't see this as a competitive, for him competing with Tesla. What's your thoughts when you saw that?
Definitely strikes me as very politically savvy on his part. He's saying nice things about everyone. He's saying nice things about Waymo. He's saying nice things about Tesla. And then, of course, he's going to plug his own product and the development that their team has worked on, which I think is to be expected from a person in his position. And but also just think about the fact that actions speak louder than words. And while he's saying nice things about Waymo and their performance inside of San Francisco, especially downtown specifically, um, Xiaopeng has kind of moved away from the HD maps approach, and they are moving much more towards Tesla's vision of how to actually solve autonomy in the long term. And so I think that his comments around FSD specifically are good just because they are coming from the context of a company that's trying to follow Tesla's lead in how to solve this problem, much more so than Waymo's. And it is a comparison and a contrast between, okay, there are definitely benefits to the Waymo approach in certain areas, but the overall question is it scalable long term? Can you produce those vehicles in large enough quantities? And are those vehicles then adaptable to a large enough range of different driving conditions? And his point about China's roads are very complex and probably much more complex than San Francisco. And that may be the reason that he decided to pursue Tesla's direction in the first place, was that they just could see that when they were trying to follow Waymo, they were not able to even get a viable product in a Chinese city. Whereas now it seems like they feel very confident about their approach and the quality of their product. So I would agree that that's going to be the correct direction. Like Tesla's overall approach, when you just step back and think about it, is that they have to have intelligence. Like intelligence has to be the thing that is the differentiating factor in FSD versus other things. That we're not going to rely on sensors. We're not going to rely, other than vision, like we're not going to go with LiDAR. We're not going to do ultrasonic sensors. We're not going to even super rely on radar. They use it some in some instances, but not in others. Um, the approach is we need vision and intelligence. And the question is, while Xiaopeng has apparently adapted their system to Chinese driving conditions better, where are they at in that intelligence piece of the equation? Because if Tesla is successful at making sufficiently intelligent FSD software, then if it's smart enough, it will be easy to adapt that to a Chinese driving environment with the correct approach and the amount of data that they need. Whereas for Xiaopeng, if they have a system that is not necessarily intelligent and uses a lot of crutches in order to operate, then it may not still be scalable. They may still be stuck with some of the same types of limitations. Maybe they're slightly different, but of the same general class that keep Waymo from being able to scale to lots of driving conditions and lots of different
Mhm.
geographies as well. So that kind of all remains to be seen. But I do hope that, and I agree with his assessment that all these AV companies that are like, we can debate, is Waymo's way the right way? Is it going to work? Is Tesla's way the right way? Is it going to work? Is Xiaopeng's way the right way? Is it going to work? Those are valid discussions that need to be had, but there is definitely a sense that all of these people that are trying to bring autonomous driving to the real world safely and in mass, like that is a very positive effort that people should appreciate. That, even if Waymo ultimately doesn't end up becoming the most profitable company in all of autonomous driving, the work that they have done to commercialize this product and work with regulators and begin the process of getting customers to understand what this technology is capable of and to be comfortable with it is all extremely valuable work. And these people, this is a point that Gally from Hyperchange was making the other day in a conversation that we were having. Like, they are our partners in promoting and advancing autonomous driving. And ultimately, autonomous driving is going to save so many lives that all of the people that helped to bring that to reality are definitely people who are doing good work that need to be recognized for doing that good work. And I agree that they should
Mhm.
come together and they should try to promote it together and to cooperate in making not only the technology itself viable, but solving all of the regulatory problems together and solving all of the public
Yeah.
perception problems together, because that is ultimately the best thing for the most number of people and will save the most number of lives.
Right. So, right. Um, so Xiaopeng is one of the two Chinese EV companies that have decided that they're going to go neural net and vision only, and the other one is Li Auto. So you can see this table where you can see that
Mhm.
Tesla is the only company today that has gone camera, which is vision only, and end to end, which is neural net. Everybody else is still doing HDM mapping and LiDAR, and they're still rule based, except for the Chinese EV. They're the ones, and those are the two that have mentioned this. And so,
Well, and I
Huawei,
think those are
yeah,
the two car companies, and then there's also Baidu, which is not necessarily
yeah,
a car company, and I think they are also kind of on that same trajectory. They're just focused more on the actual self-driving technology, more like a third-party
yeah.
vendor that is helping in that transition as well.
And I do think that what I just read there with Xiaopeng is that he's going to partner with Tesla. You know, it's very similar to what happened with Ford CEO when he tested out the superchargers. He went and tested out his own charging system, and then when he came back from that, that's when he said we need to partner with Tesla. So here's another competitor, which is Waymo. This guy, Emil Michael, worked at Uber, and he says these things are expensive. The Waymo cost of the whole vehicle is about $300,000. I wonder if that's still accurate. That's not going to replace a driver financially anytime soon. He's, of course, trying to promote and prevent, saying that Uber is still very much a leader. So let's listen to this 1 minute clip.
Taxis. They've been a dream for a long time. That dream has not necessarily woken up. Do you think that robo-taxis will arrive on time?
Well, it depends on what you mean on time. By on time, my daughter is about 4, and my thesis was by the time she's ready to drive, robo taxis will be ready. So it gives us about 12 more years. It's always around the corner, but it takes a lot more time than people think, Brian, because of regulation, the cost of the vehicles to do it well, and also just the density of enough driverless cars in any city to have a ride take 10 minutes or less to get to your door when you order one.
That means there has to be a whole lot of them all the time, everywhere.
That's right. A whole lot of them all the time, everywhere. People accepting that a computer is driving a car, and if it makes a mistake, they don't shut down the whole program. That's happened in California a bunch of times. And these things are expensive. The Waymo cost of that whole vehicle with all that spinning thing you see on the top of the car is about $300,000. That's not going to replace a driver financially anytime soon.
I don't know if you saw, Hans, but just the last few days, Uber CEO has been selling stock again. He sold 50% of his stock in the last 3 months of what he owns. Don't know if that's a sign or not a sign, but here's him what's the word? He's defending, I guess, Uber, thinking that Uber is going to be just fine for a long, long time.
Yeah, it is interesting because, the segment was they had Tesla stock price up and they said Tesla Robotaxi versus Uber and Lyft. But all of the commentary that he was making was really focused on Waymo and Cruise and these types of competitors. And, I would agree with him that a $300,000 Waymo is not a serious competitive threat to a ride hailing company like Uber. Like the unit economics just aren't there. And, I think Waymo's losing money. Obviously, at this point, Uber is finally a profitable company. That's good for them. But that doesn't necessarily address the competitive threat of Tesla. That, it takes a long time for a Waymo. Not only is that $300,000 Waymo expensive to make, it takes them a long time because, somebody's got to make the vehicle. And then a different company takes that vehicle and retrofits it with all of the sensors and computers and all the extra stuff that has to go onto a Waymo to make it drive itself. And that's a expensive and time-consuming process. Whereas every single Tesla that rolls off the factory line is already equipped with all of the computers, all of the sensors, like everything it needs. And it didn't cost $300,000 to make it. It only cost, I think whatever the average COGS is now, if you include the whole lineup, is, probably in the mid 40s. So way less. And if you just do round numbers, it's 1/10. If you said $30,000 average COGS, and I think that that's actually going to be high for the average COGS once they start producing the dedicated Robotaxi platform versus $300,000 cost for Waymo, that's a 10x improvement in cost, and they're going to be able to produce these things at scale, millions of them a year. And that addresses the questions that guy had. He says, you're going to need lots of them in a city so that you can have 10-minute rides, or, somebody within 10 minutes of you to give you a ride. That if you've got millions and millions of vehicles being produced, like it doesn't take but 10 to 15,000, I think, of these vehicles in a specific city in order to provide a fully functional, like great coverage network. And so, you can do a lot of cities, even with just 1 million robotaxis being produced in a year. And all of that is Tesla's advantage, which was not even really honestly addressed head on in that set of commentary.
Yeah. And Tesla also has their own fleet of leased vehicles that they're holding on to. They haven't sold those as well. And then they've got the customers' vehicles too. So that's
there are already
plenty.
6 million of these things on the car or in the world, in the fleet. Many millions here in just the United States. And so their ability to offer that network, at scale from day one is dramatically different than any other player.
All right. Let's take a look. The next story is Tesla Optimus is hiring. Tesla is hiring for more employees for Tesla. In this case, it's a project manager. Tomer Hakohen kind of points out that this job role, though, is for error codes, training service technicians. You only do this if it's ready. So it's interesting. I mean, it's just one job. But if you look at it, we're seeking an experienced project manager to lead the creation of symptoms on our service application, with a focus on aligning them with upstream factory quality applications, developing repair codes, and collaboration with technical writers. So accuracy and efficiency of our service operations by bridging the gap between manufacturing, inspecting symptoms, and service diagnostics. So it's just pointing out that this is the kind of job that you don't hire until you're really ready to mass produce this. And several people like Scott Walter, who's kind of an expert in this space, also agrees that this is something that you hire. Although he did say too, though, that these days, one of the best things you should be doing when you hire people is even before you need them, you bring them as early as possible in the process. What's your thoughts
Yeah,
about that one?
that would definitely have been my primary point in this, is that this is an important role. Like, if you think of Tesla and the way that they do products, and the car is a great example, where now that not only do they have their own service network, and the service network actually talks to the design, manufacturing, and engineering teams at Tesla, and that feedback of, okay, these are the things that break when we have a car crash, or just normal everyday service things. Can we improve the quality of these parts? That's a process that they have, and they try to actually improve that overall, because they're trying to maximize value to the customer, in contrast to what a normal auto manufacturer does, where the dealers are the ones that are doing that service, and the more stuff breaks on the car, the more money the dealers make on repairing those vehicles. And so they actually like it when these cars are less reliable, instead of more reliable. And that's just different, because as soon as the dealers are the customers for GM and Ford and these companies, and so making them happy makes GM more money. And right now, I mean, you generally see this, that these American-made dealer network cars typically end up being less reliable than other vehicles. And I think this is part of the feedback loop that creates that incentive, that then creates that outcome. But for Tesla, when they own that service, and especially when they own the insurance, and then they have to pay for those costs out of pocket to do those repairs, then they have an incentive that goes in the opposite direction. They want to actually improve reliability. And this piece right here, the service technician project manager, is one of those important links in that chain to get that information from out where the actual, in this case, the Optimus, is going to be operating. How does it break? What are the problems? What makes it hard for that robot to do useful work over long periods of times reliably and not cause more issues than it's solving? Having someone who is the go-between between that end point of use place and back to engineering and manufacturing, to say, okay, hey, these are the problems that we're having. How do we fix these? How do we fix them where we make the Optimus so that we don't even have the problems in the end? And it is important to get that person into that role early, so that they understand, because right now they need to probably understand, okay, how is it designed? How is it manufactured? So that when I see how it breaks on the end, I know exactly where to bring that information back to when we do have issues. And so they need to get onboarded, obviously. And this is a project manager. This is someone who's going to be kind of at a higher level. And so they're probably not only going to have a lot of work that they have to do themselves, then they're probably also going to have to spin up a team underneath them. And so you need to hire some of the managers first, and then allow them the time to prepare information and processes, and get onboarded into the company culture, and have the context of where everything is located that they need, like who to talk to and all those things. So I think this is something that is early, but not that early. I would like it, to me, it makes perfect sense for them to be hiring that person here in the next couple of months, if they plan to launch that production that's going to reach 1,000 units next year. They probably want to start that towards the end of this year, maybe beginning of next year. And that kind of aligns with the time frame of getting this person in here now.
1,000 next year, 2,000 next year. That's the big one. The final story is Ron Barron and his son, David Barron. Of course, they own about 30% Tesla. They're like billions, $4 billion worth of Tesla, I think. So he dropped a note. Barron Capital did. The vast majority of Barron Partners Fund underperformed this quarter. The vast majority of the underperformance stemmed from Tesla. So when describing their outlook for the company, though, Michael Barron and Ron Barron write, In previous instances, when Tesla shares have underperformed during a discrete period, they have shortly afterwards reflected the strong growth of the underlying business and the stock has appreciated considerably. We believe that that will be the case again. They're basically saying every time you see the stock has underperformed for a while, it will shoot up. Baron Capital owns its fund. 29.3% of the fund is Tesla, and that's because of the growth of the last several years ago. Elon replied to him saying, "Long-term return on Tesla will, I believe, be exceptional." He continues to believe this. He continues to say this, that the long term will be great. So, final thoughts on that one?
Yeah, I love Ron Barron. He's one of my favorite fund managers on Wall Street right now. He, in my opinion, is the basically successor to Peter Lynch in his investment philosophy. And for those who don't know, Peter Lynch managed a fund called the Magellan Fund that averaged almost 30% compound annual growth rate over the course of 10 or 15 years, something like that, which is a very long time to compound at that type of a rate. And one of the things that Peter Lynch said that he learned along the way was you have to know what inning of a story that you're in. That, if you're investing and you're trying to compound money at a high rate over a long period of time, that it's easy to lose money and you can lose 100% of an investment that you put into a company. And sometimes that happens. He had done that. That was part of even the Magellan Fund. But when he looked back at his fund, what he realized was that he lost a lot more money by selling companies early that were then going to go on and do incredible things and make incredible returns. And so he said he lost a lot more money by selling Home Depot when he had gotten a 2 or 3x return. And then that company went on from where he sold at his 2 or 3x to then 10x or even more, 20x the company. And so those are those 10 baggers. And Peter Lynch was, I think, the one who coined the term a 10 bagger. And he was talking about some of these companies where he missed those 10 bagger opportunities because he was satisfied with 2x returns and then sold those companies. And so if you can lose 1x of your investment by holding a company that goes to zero, that hurts, but it's less painful than getting, making 100% on your investment or 200% on your investment, but then losing then, multiples of that because you just didn't stay with the story. That is a tendency that I see literally everywhere that I look in Wall Street. Everyone is happy with these small little onesie twosie gains. And the overall net effect of that is that they lose out on the big opportunities that drive those power law outcomes that really drive long-term stock performance. And Ron Barron is one of the exceptional people that does not do that. He's not trying to time when he's buying and when he's selling Tesla. He bought his Tesla, he adds to it in areas where he can, when he can, and then he just holds on to it. And this is something that he said that he learned as well, that he lost a lot more money by not staying in names that were going to continue to perform over time because they went up in the short term. And so that's what he does. And his fund, while there is some underperformance recently, and that is driven by Tesla, that just because it's underperforming isn't a reason for him to feel like he needs to sell, because what he's looking at, and it was in that little text, he said, the performance of the underlying business. He is focused on, is the business performing over time? Is it going to continue to grow over time? As long as the underlying business is growing over time, the opinion of the stock market at this point in time, in the long term, the stock market is a weighing machine. In the short term, it's a voting machine. Is like, yeah, right now the stock market is voting against my investment compared to what it was doing a year ago. That's not necessarily what he's concerned about. He's saying, is the underlying weight of the company growing over time? And with Tesla, it definitely is. And so he's going to hold on. He's going to tell his investors, yeah, right now things are not going as well, but that's not going to change my investment thesis. I know that And this, going back to Peter Lynch one more time, he said the key to knowing should you buy or should you sell is, what inning am I in? Am I in the second inning of a 9-inning game, or am I in the 9th inning of a 9-inning game? Because if you're in the 9th inning of a 9-inning game, then maybe it's time to take profits. But if you're in the second inning of a 9-inning game and you've got some money on the table and you sell, then that's when you make those big mistakes. And Ron believes that Tesla is not anywhere close to that 9th inning, and so he's holding on.
Nice way to end this. Perfect. Beautiful. Lots of activities. You see the FSD, all the stories we did, the bots, all the stories we did today, all show you we're still the second inning. Thank you so much, Hans. Appreciate you. Follow him on his YouTube channel, Hans C. Nelson. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.